What are business loans or commercial loans for smaller businesses or startup ventures? Well, to start with, it is a loan made directly to the business in the name of the business. Now, these types of loans are interesting because generally lenders do not want to make loans to a new business entity. They don't have an established track record, so the risk in making such a loan is very high. So in steps the U.S. government. The Small Business Administration is an agency of the U.S. government that is charged with promoting small business and entrepreneurship across the United States. Now, they primarily do this through education efforts, but their number one thing is backing for commercial loans or backing for loans to small business. And what does that mean? Well, generally, to make a loan, the bank is going to want some form of collateral and a surety of payment. Well, the SBA steps in and serves as a cosigner for small business loans if the borrower qualifies. That is, the borrower is borrowing money, and if the borrower cannot pay the money back, the federal government will step in and repay the loan. Now, if that happens and the federal government does have to repay, then that creates a debt or obligation on the part of the borrower to the federal government rather than the bank at this point. So the SBA is simply a guarantor, and they have different programs that you can qualify for, and they're continually changing. But the value of these loans generally range from just a few thousand up to $1 million or more, particularly when it involves real estate. But the important thing to remember is that the SBA is not making the loan. It's just if you qualify for their programs, you can go to an SBA approved lender and borrow funds under these programs, and the SBA, if approved, will act as a guarantor of the loan. In the event you can't pay it, the SBA will step in and pay back the lender, and then you will owe the money once again to the federal government. This is to incentivize or to make it possible that the lender will make this type of loan to the borrower, because otherwise the borrower would not have access to capital at all. So what do you need to get one of these loans from a lender? So to start with, you go to a bank that or lending institution that's SBA approved, and then you're going to submit a business plan. You are going to provide detail on how you're going to spend the money, and you're going to list any collateral that can be listed for the loan. Generally, these loans require you to spend the majority of the money on collateral. That is, things that the bank could come and take back or repossess in the event you do not repay the loan. They don't want to see you using the loan simply for salaries or for something like marketing budget or something that they cannot recover. But buying equipment, buying inventory, things of that nature constitute collateral that can be taken in the event of lack of payment of the loan. So there you go. They're going to want a statement of collateral, and generally, as I say, 90% of your money needs to go towards purchasing something that constitutes collateral. Also, the bank isn't going to loan you probably 100% of what you need. So you need to make certain that you have some funds yourself in the bank that show that you can meet the shortfalls. If in your operational budget you have an amount allocated for salaries or for marketing or other expenses that are not capable of being covered by the loan, you need to show that you have proof of funds to cover that as part of the plan. So the bank is going to step in and provide the money of financing for collateral and equipment, things like that, and you are going to be able to cover on your own the other portions. So this is one of the big hurdles of getting an SBA approved loan or any form of business loan, the fact that you have to have money already that is going to cover the non-collateral based elements of the budget. You're going to have a credit history check personally. The business itself does not have a credit history, so the bank is going to look towards your credit history. And then this is going to help judge the interest rate on the loan that is charged. But generally, the SBA backing keeps the loan rates within an acceptable or competitive range because of the personal guarantee there, and then or the SBA guarantee. And then it's going to require a personal guarantee. That means that as borrower, on behalf of the business, you personally guarantee that the loan will be paid back. So if the business goes under, then you as an individual owner of the business is personally liable. All owners of the business generally are going to have to sign this personal guarantee to assure repayment. So the bank has all the certainty that it can muster in assuring that it's going to be repaid. It has SBA backing. It has a personal backing through a guarantee. It has, once again, collateral that it can repossess. It has assurance that you have funds, and it checks your credit history. So all of these things together is generally what goes into getting a commercial business loan. It takes a lot of preparation and a lot of effort, but thanks again to the SBA, the Small Business Administration, these types of loans are available for entrepreneurs to initially fund or provide seed funding for their business.